to be back this week. I'm going to go ahead and start my presentation right away. So I wanted to talk about credit cards this morning as our last topic. This is one of those things where I think it's really important to know what you're getting into before you start using credit cards, because there's a lot of really costly mistakes that can be made. So hopefully this information is helpful for you guys just to, remember and keep in your mind when you do eventually start using credit cards later on. So to start us off, I have a couple opening questions. So first, I just want to know if you guys want to type in the chat or feel free to unmute and talk out loud. Let me know, what do you know already about credit cards? Any little pieces of information you've heard or things that you know from maybe your parents using credit cards? Go ahead and share in the chat. And if you don't know anything about credit cards, that's totally fine. I wouldn't really expect you at this point to know much, but that's why I'm here to teach a little bit. So Yamina says it's not meant for spending constantly. Yeah, I agree. You have to be really careful. Watch your spending with cards. And Caitlin's asking, it's not your money you are spending. Let's keep that question in our minds, because I'm going to go over that a little bit later. It's money you have to pay back. Yep, I agree. You can use it for shopping for food. Yeah, you can use credit cards in really any store that you go in these days, unless it says cash only. Most stores accept credit cards as a way to buy something. So. All right, thanks, guys. Those are all helpful little pieces. Oh, I think there was one more that came in. The bank loans the money and you have to pay it back. Yeah, very good. So you guys do know a little bit already. That's helpful. All right, so my other question that I want to go over before we get started is, what is the difference between a credit card and a debit card? Does anyone know? Oh, I'm seeing more tips about credit cards, about interest. Yeah, we're going to go over all of that. Debit card is your money. Thanks, Kayla. Yep. Yeah, debit is your money and credit is the bank. Good. Okay, so you guys are a little familiar with these terms. That's really helpful to know. The main difference to know about the difference between credit cards and debit cards is exactly what you guys were saying. The debit card, here, let me go to my next slide. A debit card is linked to your checking account at your bank. So when you spend money using your debit card, that money is getting withdrawn right out of your bank account. You'll see it show up in your transactions a few hours later, maybe the next day. And you're not being charged interest when you use your debit card like this, because you're paying for that item right away out of your bank with your money. And spending using a debit card doesn't impact your credit score. So we'll explain a little bit about credit later on. So using a credit card is what you guys were starting to say in the chat. When you use a credit card, you are actually taking out a short-term loan. You are borrowing money in the short term, and you're not going to be paying for that purchase until later on when you get your bill. And if you don't pay the full bill off when it's due, you will be charged interest on these purchases. So that's like the big thing to know about credit cards, is those interest charges can really add up. And then spending using a credit card does impact your credit score. Oh, and Kayla says, if you take too much off a debit card, you have a fine. I think maybe what you're thinking about is, like, if you use a debit card and you don't have enough money in your bank account, you can overdraw your account. And then, yeah, you would get hit with a fee, an overdraft fee. That's right. So credit card doesn't have that same process because you're loaning the money in the short term. Okay, so I want to tell you guys about a story, an experience I recently had. I was out shopping at TJ Maxx, which is a store I like to go to a lot. I don't know if you guys shop there. But I went up to the cashier. I was going to make my purchases, and the cashier asked me, "Are you going to be buying these items using your TJ Maxx credit card?" And I said, "No, I don't actually have one, but it's been something I've been thinking about because I do like to shop at TJ Maxx a lot. I go to Marshall's, those stores are connected." So he said, "Well, do you want to open a credit card with us today? You'll get to save 10% on your purchases today," which is like, saving 10%, that's a nice sale. So I said, "You know what? I think, yes, I am going to sign up for a TJ Maxx credit card today." So it was a really quick, super easy process. I think it only took a couple of minutes. I gave him my driver's license. I had to answer a couple questions on the keypad, gave my social security number so they could do a credit check. And I know that I have really good credit, so I wasn't really worried about something bad showing up. I had to, give information about my household income. And within a few seconds, I found out that I was approved for a credit card. He said, "Congratulations, you are approved for a new TJ Maxx credit card." Really easy process. And then he said, "You can put these purchases right away today on your new credit card." And I said, "Sure, charge them to the card." Like, I just opened it.
Right.
Does someone have a question?
Okay.
Oh, maybe not. Okay. So I said, "Sure, charge them right to the card. That sounds fine." So then about a couple weeks later, I actually received the actual card in the mail along with the agreement terms that, remember, I'd already signed on to this agreement. I'd already actually used the card. There's purchases waiting on there for me to pay. So I actually took a picture for you guys of the agreement terms I got in the mail. So here they are. Make sure you read very carefully. Just kidding. I know this is way too small for you guys to see, but I just wanted you to get an idea of kind of the fine print that you're signing on to. They didn't give me any of this information. They approved me for the card, like I said, in a minute. And here you go. Here's what I apparently agreed to when I signed up for the card. And I'm going to be honest with you guys, I don't really plan on reading this very thoroughly. I think, as a lot of you guys know, like, if we're really honest with ourselves, when you update software on your phone or you sign up for agreement to use a new app, you're just clicking the box and saying agree. Like, because if you did sit down and really try to read this, it's very confusing language. They say they try to make it simple to understand, but if you actually read through this document, it's pretty confusing. So let's zoom in a little bit on the first page that they gave me to understand a little bit more about my new credit card that I just got. So this box you're going to see when you guys apply for a credit card, this box by law has to be in the agreement terms. They say to try to make it a little bit more obvious of what you're signing on to. So you can see on the top there, my annual percentage rate for my card for purchases is 26.99%, which is really high for a loan. I think the average interest rate for a credit card these days is around 18%. It might be a little lower right now just because interest rates are low. So a little shocking for me, I must say. They didn't give me this information when I applied for the card. I found out afterwards. And remember, I've already used my card before I even got this info in the mail. So an APR, again, is the interest rate that I'll be charged if I don't pay for those purchases when my bill is due. And then the other thing I wanted to mention on this page is you can see the next line down, there's a separate APR for cash advances. And that one's even higher. It's 29.99%. I'm wondering if any of you guys know what a cash advance is on a credit card. I think this is a really important thing to understand. I work with adults who don't know that taking out a cash advance on a credit card is, and they find out after the fact. So taking out a cash advance on a credit card, you can actually put your credit card into an ATM machine similarly to how you would use a debit card to withdraw cash from an ATM. Yeah, so, right. Thank you, Melissa. And you can get, like, say you needed to pay another bill and they wouldn't take a credit card, but you needed cash to pay someone, you can take a cash advance out on your credit card. But guess what? They're going to charge you 29.99% interest on that charge. And then if you look down here in the fees section, it's an additional $10 charge to do that little loan, or 4% of the amount of the cash advance, whichever is higher. So you're getting hit with some crazy fees. So I just wanted to like mention right off the top, really, really think carefully if you're planning to take out a cash advance on your credit card, know what you're getting into. So a little bit more information about my new card. My credit limit is $1,000. Does anyone know what a credit limit is when we talk about credit cards? This is something that's really helpful to know when you start using. Yeah, thank you, Kayla. You can't spend more than that. So I'm allowed to borrow up to $1,000 at a time before my card would be maxed out, as they say, or I have to make a payment on it to lower the balance so that I can make more charges. And then, like we said, my APR, my interest rate is 26.99%. And we're going to say for the purposes of today, my minimum balance calculation is 3% of the balance, which I'll explain a little bit later on what I mean by that. So just got my new credit card in the mail. I'm really excited to use it. And, you know, it's really exciting to get a new card because you can go out and spend a little money, right? So there's a few things I've been thinking about that I want to buy. So let's do some shopping, right? This is exciting. I'm thinking about maybe upgrading my phone. My phone's getting a little old, or maybe I want to get an iPad, some new technology. Actually, I've been really eyeing up a pair of AirPods because I really like, I've seen a lot of people using them. They seem really convenient. So I'm going to go ahead and buy myself some AirPods. It's going to cost me $200, but no big deal, right? I'm going to swipe my credit card. No money's due at the time. No money leaves my bank account. My paycheck's not coming till next week. It's okay because got my AirPods, used my credit card. The transaction was approved. Awesome. So I'm really enjoying my AirPods. I think I'm going to do a little more shopping. I've been thinking about getting some new furniture for my house, maybe a new TV, although I think that might be a little bit expensive for my credit card limit of $1,000. So I'm going to go ahead and buy this chair, I think, for $300. And then let's go ahead and buy this lamp too for $50. Bought these online, so it was really quick, you know, click and buy my purchases. And transaction was approved. Awesome. All right. Here's some more things I've been thinking about getting. Really enjoying my shopping spree here with my card. Getting a lot of new things that I'm enjoying using. How about I get this Apple Watch at the top here. Might be kind of fun to have an Apple Watch, right? And I want to get like the newest, latest and greatest watch. So it lasts as long as possible because you know how quickly the technology becomes obsolete. So it's going to cost me $450. So I think at this point I've spent up to my limit. Spent $1,000, can't use my card anymore. It's going to be declined if I try. So I'm enjoying my purchases, really having a great time with my new stuff. And then a few weeks later, my credit card statement comes in the mail. So here's my little statement. As you guys can see, my balance is $1,000 on there. My minimum payment is $30. So remember I said the minimum payment calculation was 3% of the balance, which is $30 of $1,000. And I've got my payment due date on here. So this is how credit cards work. I bought $1,000 worth of stuff, but if I wanted to, I could just pay $30 and that would be totally fine. My credit would be, you know, not too impacted. I'm paying my bill on time. It's okay. So what do you guys think? Should I just pay $30 and go on with my day? So let's say that I do decide, no, pay more, says Kayla. I think in real life, probably we'll get to that, but let's say I did decide that oops, maybe I spent a little too much. $1,000 is a lot. I don't know that I can afford. I have a lot of other bills to pay right now. I don't know that I can afford to pay $1,000 on my card. So let's say I just pay $30, pay my minimum payment on this card. Let's see how that might work out for me. So I owe $1,000, pay 30 bucks. My interest rate, remember, was 26.99%. I don't think you guys maybe realize like that's really high. So let's say I never use this card again, and I just plan on paying off this $1,000, and I'm only going to make my minimum payment every single month. Who knows how long it might take me to pay off this debt? I'm not going to make you do the math because it's, as you can imagine, it might be a really long time. So if I never use my card again, it's going to take me almost 13 years to pay off just $1,000. And remember, I didn't buy them much stuff, right? It was like AirPods, a watch, a a chair and a lamp. That was it. Just paying the minimum will take almost 13 years. And think about what I got. Who's going to keep using their AirPods 13 years from now? Or my Apple Watch? Do you think it's still going to be relevant technology in 13 years? No. So just think very carefully about that if, your plan is to just pay the minimum on your credit card. Let's think about the interest I'm being charged. If I do this, it will cost me almost $3,000. I'll be charged $1,931.91 in interest over the course of paying back this $1,000 that I spent. So now your AirPods that were just $200 at the time are costing way more over the time of paying this off. I see a lot happening in the chat, so I want to just double check. Yeah, everything will be obsolete.
Real quick, ask a question, Laura.
Yes, yeah, let's pause for questions. I think that's good.
So my question was, how long do you have to pay the amount back before the interest hits in?
That's a good question. So let's go back. Actually, I want to go back and look at that because it showed it on my credit card agreement terms. I didn't want to point it out at the time because I wanted you guys to follow along with my irresponsible spending. So if you look in this box, it says paying interest. Your due date is at least 23 days after the close of each billing cycle. You will not be charged any interest on purchases if you pay your entire balance by the due date. So that is what you want to do, is pay your balance in full if you can, so that you don't owe any interest. So that's the grace period they give you of 20, usually like 21, 23 days is pretty common, so that you have some time to pay before they're going to start charging this interest rate. But I don't know if you noticed, if you take out a cash advance that we were talking about, they start, I'll show that slide later, actually didn't say in the front box. It says it actually in another section in my credit card agreement terms. If you take out a cash advance, withdraw the cash from the ATM, they start charging interest immediately on that loan. So again, terrible idea. Cash advances, just remember, like, don't do that. Were there any other questions before I go on?
When you said it takes 13 years to pay, that means, but you're still paying like the $30 or so every month for that.
Right. Right. So so for this example, I did 3% of the balance. So my minimum payment would reduce a little bit. As the balance got smaller, it would go down. So I'm paying $30 or like a little bit less as I go on. But people can fall into that trap because it's nice. Like, you've got your paycheck, you have lots of other things you want to buy. So like, I'm just going to like pay off my credit card a little bit and not worry about it. But it really adds up if you do it that way. Oh, so Kayla says, my mom says that she doesn't use a credit card for food because she still has to pay for it after we've eaten it. Yeah, so we'll get into responsible use of credit in a little. Here, let's move on to my slides. I just wanted to go over, just like you guys can see how credit card companies make a profit off of you. And they do lots of clever marketing tricks to get these to be very enticing. They tempt you to overspend. People have done studies where they see that if you're given the option to pay for something on credit versus using cash, every single time people will spend more if they have credit as the option. It's just like a thing with our brains where it doesn't feel like real money. You don't really think about what you're doing. And before you know it, at the end of the month, you get your bill and you realize you spent a lot on that card. Credit card companies make a ton of money off of interest charges and other fees. If you pay your bill late, they'll give you a fee. There's all kinds of fees that you can get hit with. And signing up for a credit card is super easy, as you guys saw in my example. This is a real life example. This literally just happened to me about a month ago. It took me a couple minutes to get this card and I was approved. Before I even got my agreement in the mail, I had already used it. And the terms and agreements, which I kind of mentioned in the beginning, are really confusing. And I think they do this intentionally to make it feel like this mystical, like magical tool that I have this fancy, flashy credit card and I don't really understand what's happening, like what all these charges are, but whatever, I'm just going to pay it back every month and it's okay. I just wanted to check over the chat.
She would only get a credit card to improve her credit. And I said that you only improve your credit if you use it. You can't just open the credit card and you
right.
The credit,
yeah.
You have to use it. And then she said, yeah, I will be, for buying purchases, I know I can pay back and not paying myself, like the phone bill, for example. She said that's what she would use her credit card for.
Yeah, you guys are, yep, I love that. You guys are getting a little ahead of me in what I wanted to go over, but yeah, I want to talk about, because credit cards, let me move on and then we'll get to that. So I wanted to just mention the confusing terms and agreements. I think it's helpful to see these like real life examples of how these can be confusing. So let me show you. In my example of the exercise, I said that my minimum balance calculation was 3% of my balance, which they say is like a common thing. That's how they calculate the minimum payment. But let me show you actually how my minimum balance is calculated on this credit card. And I typed it up for you on this slide. So look at this, like this is how they determine my minimum payment calculation. I can tell, like I've read through this a few times and I still honestly don't really know what my minimum payment is going to be. It's like all of this, all these extra little bullet points. I don't know, guys, like what is the reasoning for it being this confusing? I think it's just one of their tactics for us, like for them to be kind of one step ahead of us and get us to charge extra money that we can't pay back. And then I want to show you one more slide about, or I took a picture of my terms. This is how the interest is calculated on my credit card. So you'd think like, okay, don't they just add the 26.99% onto the balance, the yearly balance, and that's what it is. Apparently it's a lot more complicated than that. And I'm not going to ask, we're not going to read through this whole thing, but this is just to show you the credit card companies are smart. They have all these weird ways of charging us little extra amounts and we just pay it because it's very confusing. And I think this is the part where it says for cash advances, we charge interest on your cash advance from the date you make the transaction until you pay it in full. So that's how they get you there. And that's how they made their $180 billion on interest and fees on us. So that being said, credit cards seem like really dangerous, right? So why should I bother using a credit card? Like if, it seems like I might get charged all these kinds of things. Why would it be a good thing to still try to use credit cards? It seems like people have a lot of questions. So I want to leave time to open it up for questions too. Oh yeah, Kayla says they give you points so you can get free stuff the more you use it. Yeah, that is a perk of credit cards. And that's pretty much why I sign up for this TJ Maxx card, because if I buy things in their store, they give me rewards points and then I'll get a little money back. I get cash back on my purchases so that I can get some free stuff out of it. So That's what I like. I like using credit cards. There's travel points you can get. There's cash back. So they do have some nice perks. But the main reason why you'd want to use a credit card, as long as you do it responsibly, is to build your credit score, which Melissa was starting to say in the beginning. Like, you open a credit card, but you also need to use it and show that you can pay back that amount on time so that you can have strong credit.
Can't you like not buy certain stuff if you don't have a credit card? Like you can't get a hotel room or like a car and stuff like that unless you sign up with the credit card.
Yes, so that is a great example. I think in a hotel, occasionally they might let you put a debit. You have to put down a card as like a damage deposit in case something happens. They can charge your account. I think in some cases you could put a debit card down, but they don't, like, I want to say they put like a temporary charge on there that doesn't come back off for a few days. So if you don't have money in your account, you wouldn't be able to do a debit card. So yeah, in most cases, they want you to put down a credit card in the hotel room. So, and then, yeah, maybe if you need to rent a car or something, you need to have a credit card to do that.
Gita has her hand up.
Go ahead.
I was just gonna say, like, everything that you explained in shows that, like, you know, the goods and the pros and the cons of credit cards. But I feel like companies also get you because, like, say you wanted to buy something like around the $1,000 price, specific companies allow you to pay it off, but you have to get and be approved for their credit card, or else you would have to like pay in full. And yeah, that's just something I wanted to mention because I thought it was interesting. Because it's like you can pay $12 a month for 6 months or things like that. But yeah.
Yeah, thank you.
Can I just share about the hotel? So I was very leery about credit cards for a long time. So I would just use my debit card. I said, I don't need a credit card. I'm gonna use my debit card. So I went on a trip and they did let me secure a room with my debit card. And then I got an alert from my bank that like $600 was taken off my debit card. And I was like, whoa, I didn't spend $600 anywhere. So I had gotten a room for, I think the total of the room was like $200 or something. But in their terms for the hotel, they said that when you use a debit card, they have the right to secure, like Galia said, a big deposit, like a security deposit of 3 times as much. So they took $600, kind of like froze $600 on my debit card. And then I didn't get it back to like 3 days after my trip. So for my trip, I didn't have access to $600 of my spending money. And I got it back, they give it back, but that kind of put me in a jam for the trip because I was expecting to have that $600 to use while I was on the trip.
Yeah. That's a good example. Thanks for sharing. So it's tough because, right, like you want to have strong credit and use credit, but there's a lot of traps, as you could see from my example. So a little bit about credit. Credit scores range from 300 to 850. So the higher your score, the better. And if you have strong credit, it really does open many doors for you. So having excellent credit gets you things that a lot of us want to have in life. So financing a house, if you guys want to buy a house one day, you need to have good credit so that you can be approved for a mortgage. If you want to finance a car, or take out a personal loan for something else, you can be granted the best interest rates on loans for your mortgage or your car. A lot of people don't know that having bad credit affects your car insurance premiums. It can make you have to spend more money on that. And then also, if you want to rent an apartment and not have to have a cosigner, having good credit is really important to be approved to rent the apartment. And then even cell phone payment plans, like when you buy a new phone and you want to pay it out over the 24-month deal, if your credit is not great, they might ask you to put down a deposit on the phone first. Like you have to pay a larger amount up front in order to buy the phone. And employment options too. Some employers will do a credit background check on you to actually hire you for that position. So if you have terrible credit, that could be a reason for them to not hire you for the job. So just something to think about, that, you know, having credit is important.
You have another question, another hand raised?
Okay.
It was for me again. So for what you were just saying about the phone plans, like, does it just depend on which company, like how long you have to pay it off until you get charged with like interest again?
So I think for the cell phone carriers, they're not charging interest on the purchase. That's like their way of locking you into a contract where they're like, you pay your phone over 24 months and then you're signed up to use our service. But it's more just like, if you have bad credit, they might not trust that you're going to pay that amount every month. So they'll make you pay a deposit first in order to be approved.
And then the other thing was, I don't know if this is true, but I guess I was told that like you either get charged or it hits your credit if like someone does a background check or like checks your credit. I don't really know how to explain it, but I don't know if that's true or not.
Yeah, that's a good question. So there's different ways that your credit can be pulled that will impact your score. They're actually called hard inquiries and soft inquiries. So if you're applying, so like my example where I just applied for this new credit card, they did a hard inquiry into my credit to make sure that I was a responsible user of credit and they could approve me for the card. So that that did drop my score a few points, probably like 20, 30 points. So if I went to try to do something else and show my credit score again, they're going to see that and say like, oh, your score is a little bit lower. But I figured it's okay because I don't need to apply for any more credit anytime soon.
Why does an inquiry drop your score?
Yeah, it's one of those weird things that they look at to see how credit worthy a person is. So I think they see like if you're shopping around for a lot of different loans and applying for credit cards, you're seen as like kind of too greedy. So it lowers your score to prevent people from opening a bunch of credit cards or applying for a bunch of loans all at once. But then like there's also soft inquiries. So like if an employer was checking your credit to hire you for a job, they would do a soft pull and it wouldn't drop your score in that case. And the same thing, like if you wanted to look up your own credit report or credit score, it's not gonna affect your credit.
And then you also, it'll drop it. It's only a temporary drop with the hard score.
Right.
Stay low as long as you then do responsible spending, it will go back up.
Mm-hmm. Exactly. So you guys have already started saying, but let's think about like what's a responsible way to use a credit card, since we've decided like, yes, credit card companies are evil, but there are responsible ways of using them to help you out. So I think what some people were mentioning was paying more than the minimum balance. I think we already figured that out right off the bat, that if I just paid the minimum on my card, that would not be a good idea. So try to pay that balance if you can.
I try to only use my credit card for things I know I can pay off in the month, or definitely a little bit, just a little tiny bit beyond a month, maybe like a month and a half. So I don't buy a lot of things I don't need. And I think twice about using my credit card. Do I think I can pay this off like within 1 to at max 2 months? If I can't, then I try to find another way to make that purchase, or not make that purchase at all.
Yeah, that's a great piece of advice. Try to have the money first before you're putting it on your credit card.
But can I just say one thing? You have to be careful, because sometimes you plan on paying it back in the month or 2 months, but then as we learned last week, when those emergencies come up,
Yeah.
flat tire, you get a bill you weren't expecting, your pet gets sick, whatever happens, now all of a sudden I'm not able to pay back what I thought I could, and then I find myself having to pay less and the interest kicks in.
Yeah.
Could I add a small thing to that?
Yeah.
So I got that advice from my dad when I was a kid about making sure you only use the credit card for what you already have the money for. But that also meant that I was too scared to use it for big emergencies when I really needed the money. Like a couple years ago, our fridge died and I didn't have enough money in my checking account to pay for a new fridge, but I need a fridge in my house. And I didn't know what to do until someone was like, you've got a pretty high spending limit on your credit card. You never spend it up. Buy the fridge. It's going to cost a couple $1,000s to get the one that you need for your house. And I paid it off over, I think, 5 months. And so I ended up having to spend a little bit more because of the interest. But without the credit card, I wouldn't have a fridge. So it's really important to avoid paying interest if you can avoid it. But also, it's really helpful for emergencies when you just don't have that money in your checking account.
Yeah, absolutely. And I'm so glad you mentioned that, because that's kind of my point, is like, I don't want to scare everyone too much out of using credit cards entirely, because they are really great financial tools to have the privilege of using. But for exactly that reason, like, it can be helpful to have a credit card in the case of an emergency. If you have no other option, use the card, like that's what it's for. But and now let me go to my next slide, because I have this is like how to win the credit card game, is kind of what we're saying. Like, if you can help it, like Melissa was saying, try not to charge more than what you can afford to pay back. But I have further down, if you must use your card for an emergency, just make sure it's something you really do need and not just something you want to buy. Like in Galia's example, like, you need a refrigerator, buy the refrigerator. Yes, it sucks that you're going to have to pay that back over a few months and spend a little on interest, but at least, you have the ability to get your fridge and not go without food. The biggest key, I think, with using credit cards, more so than like, okay, we want to use them just a little bit, not too much, is making sure you pay your bill on time every month. So even if you are in a case where you can only afford to pay the minimum for that month, it's okay. The important thing is that you pay it on time, because that is the biggest hit to your credit score, is when you pay your credit card bills late. That will drop your score way more than anything else will. So keep that in mind. Set an alert on your phone. Give yourself some kind of reminder when that bill is due. You can even set up credit card payments on auto pay if you want to do it that way, so that it's never late. And I have on here, keep your usage below 30% of the credit card limit. This is another thing, like, if you're really wanting to build good credit. In my example, I maxed out my card at $1,000. In reality, you would try not to do that. You want to try to keep your usage of the card at 30% of your limit, because this shows that you're not using too much available credit in your name. So when they look up your credit score, that's going to help you out if you can do it that way. And I have on here, maximize rewards points. So think about places where you're going to do a lot of shopping when you start thinking about applying for cards. You can do research online and apply for a specific card that works best for you. And I can tell you, when I got my first credit card in college, this is something I really didn't think about, and I wish I had, because now I still use that card. I don't want to close that card because it's helping the length of my credit history, which is good for my score. But the reward system on it is really not good. So think about, like, do you want a percentage cash back on your purchases, or is traveling something that you're interested in? Do you want to be able to collect travel points? Yeah, so just the rewards points are really awesome with credit cards. So if you can use them in that way, that's something to think about, to strategize.
I put in the chat, this is where all that school math is helpful.
Yeah.
In terms of figuring out all these percentages, a lot of times you're like, why am I taking this math? Why? I'm not going to use it. But with credit cards and finances, you will use your school math.
Wait, so when you get it, is it like a predetermined thing, that score that amount that you have, and that's where you talk about the percentages?
Say that again. What's predetermined?
Like the max
Yeah, so your credit limit is determined for you. And it's usually based on your income that you tell the credit card company what your income is and your credit score. So if your credit score is low or like you're new, let's say like you're a new user of credit, your limit will be low so that you don't spend too much. And I should say too, like in my example, when I maxed out my card, if I tried to use it again, it would be declined. There are some credit cards, and you have to read the fine print on this, that you can actually go over your limit, but then they'll charge you a fee for going over the limit. It's not as common anymore, but that's something to be careful of too. Don't spend more than your limit.
Melina has a
Oh yeah, I
question.
see. Around what time should I sign up for a credit card? I think, yeah, like during or after college makes sense, because when you turn 18 is when you can start building your own credit. So if you feel like you're in a place where you've got steady income and you can use a credit card just a little bit every month to start building your own credit, I think that's a great time to think about it. There are student cards that you can apply for that, like, they're meant to be for people that don't have any credit history. Whereas like if you tried to apply for a regular credit card, you probably wouldn't be approved because you have no information on you. So those student cards can be nice as a way to build your credit and start off just practicing using it. I think it's something I hear a lot from the adults that I work with is there's this myth, and I can stop sharing now. There's a myth that you like need to spend a lot of money on credit cards to build your credit score. Like you should always leave a balance on there to help build your credit. None of that is true. You can have a credit card and spend just like $10, $20 on it every month and then pay the bill off when it's due. That is going to build your credit just as well as if you were spending $10,000 every month on a credit card. So don't feel like you need to be using it all the time. It's not necessary. Unless, you know, if you have a really good setup, like the way I spend my money now, I make all of my purchases using my credit card within, you know, I'm a responsible spender so that I know I can pay the whole bill off at the end of the month. And that way I'm getting all the rewards points that I want to earn, but you don't have to do it that way.
Yeah, I do that too. I just started doing that where I pay all my household expenses on my credit card, but I know that I already have money set aside in my income, in my budget. So I make sure that I use the money from my budget to pay my credit card bill off every month. That's the way that works. Because if you do it, you got to make sure you pay it back, or else you get in trouble really fast because you're making a lot of purchases. So it takes a lot of discipline.
Yeah.
An interesting fact, and I don't remember the exact year it happened. It used to be legal for banks to set up tables on college campuses and offer credit cards to any student, and they would rack up huge amounts of debt. A lot of people had like their credit scores and their finances ruined for decades.
Mm-hmm.
And the United States government passed legislation against it. Credit cards are not allowed to have tables on college campuses anymore because of that, because there is this awareness that when you are sort of newly free from your parents, maybe, or when you're trying to start a new life, that when these banks offer you these huge credit lines, that it's a really bad idea.
Mm-hmm.
So that's,
yeah, I'm so
going
glad
on.
they don't do that anymore. Thanks for sharing that, because that's exactly what happens to a lot of people and that's why I'm like talking to you guys now before you'd be getting a credit card. Like I said, have this information up front, because people will, you know, it's like, oh, get this free backpack, sign up for our credit card. Like, oh, that's a nice looking bag. I think I want that. And then you start using the card without really knowing what you're getting into, and then realize like, I spent way too much money and I can't pay this off. And then you're starting off paying this debt payment every month and paying all this interest. So I don't want that to happen to you guys.
You do have to be careful, because as soon as you start applying for colleges now, you'll start getting credit card offers in the mail. I have
yeah.
three, well, my oldest daughter graduated from college, but my other two are currently in school, and as soon as they applied to college, all of a sudden they were getting credit card
They're after them.
offers.
Yeah.
And there were some like amazing sounding offers, like you said, sign up for this and get this. You know, they were giving away TVs and all kinds of stuff, giving you money to sign up, and it just
I don't
sounded
understand because don't you
enticing.
have to be 18?
Well, my kids are 18. They're going to school. I'm saying when they applied to college, they were 18.
Yeah,
So,
and I think I'd probably have to double check on this, but I think maybe when you turn 16, you could, like, if a parent co-signed the card, then you would be able to use it and be a user of that card.
right,
So that might be why they'd be sending
right.
them then. But yeah, when you turn 18, you don't, you can get your own card. And that's what the credit card companies want to get people when they're young and not, not really thinking too carefully about their spending. But we can beat them at the credit card game if you're careful with it.
There is a thing called a secured credit card that my two oldest daughters have done. And basically they wanted to do it to build their credit. Once they started working, because they wanted to feel secure enough, like you said, that they had a steady income to pay it back, they reached out and got a secured credit card. They had to put down like $250. So you have to actually kind of like pay to get the credit card. And what happens is that $250 is put into like a savings account, and then that's going to become your credit limit. So they had a little small credit limit just for emergencies, and they only could spend up to $250 or whatever amount they had in that savings account. And both of them used that to build their credit. And their credit scores are really high now as a result of that. But like Laura said, they use all of the responsible practices. So they didn't use that card for, just frivolous purchases. They only used it for emergencies or important purchases and paid it back as soon as they could.
That's awesome. Yeah, and that's a tool that I recommend to people, even adults that I meet, that I had an example of someone recently that I met with who had never really used credit cards her whole life. She was a person like, I wanted to be safe with my spending, so I would only use my debit card so I wouldn't accidentally spend too much money. Well, then she came to a point where she wanted to purchase a mobile home to move into. And she had money in her savings account to buy the mobile home. It was going to cost 40 grand or whatever to buy this house. But then she found out when she went to the mobile, like the trailer park, to actually get the home, you have to rent the land that your mobile home is sitting on. Well, the park denied her application because they said, you have no credit history. You're not allowed to rent land from us. So her whole plan of getting this house was messed up because of never using credit. So for people like that, I even recommend this secured credit card as a way of first building up your credit. So they're really helpful for people that have no credit history because you're putting down that deposit first and you have a low limit. So yeah, I'm glad that you mentioned that, Melissa.
Any questions? We have a couple of minutes because we started a little bit late, so we have like 2 more minutes.
Yeah, ask them now. I'm here.
Yes.
You can always email me later on though if you think of something.
And remember, there's never too many questions and there's no stupid questions, not in this space.
No, definitely not. I've probably heard all the questions about credit cards too at this point. So, and that's from people like who are 50 years old and are just figuring this out. So you guys are ahead of the game. You're learning it now.
I'll just give a couple minutes. People want to type. This has been great. This workshop's been great, and the chat was amazing. Thanks for participating. Caitlin said,
yeah, I was going to say thanks for participating and asking questions and using the chat. That was great, guys.
Another 30 seconds. I know sometimes it takes a minute to type what you want to say. Don't worry about spelling.
So I have a last question. So
Sure.
with those secure credit cards and stuff like that, when do you suggest people get credit cards, and as in like using responsibly and like building their credit just so to prepare in the future if they want to get houses, cars, things like that?
I think starting as early, like when you turn 18 is a fine time to start. Like we were saying, when you get your first job and you've got money coming in every month, you can start using credit cards because part of your score is determined based on the length of your credit history. So the longer you've been using credit, the better that looks in the eyes of lenders. So if you can start early and you're feeling responsible about using it and you're gonna get your score up there nice and high, it's good to start early.
Great question, Tagita. I think you gave everybody a lot to chew on this morning.
I know, I feel like I'm always talking a mile a minute when I come do these workshops for you guys.
You did a great job. And this was definitely, I can tell by the chat, a topic that was needed, a topic that there was a lot of interest in and questions about. As always, feel